What's going on, everybody? We are back with another watch list. We have around 15 or so names to cover. So without further ado, let's just go ahead and get this started. So coming into our first name for the watch list for the week of 8/15. Granted, it is also Opex week, so I do advise some kind of caution in case there is some kind of, Opex volatility with some kind of premium decay, premium burn. That does usually happen during the week of Opex. So, starting off with our list, we have ASML. And the reason this made the watch list is for a few reasons. As you can see, it's already annotated on the chart. So, for one, when I come in and I pretty much just draw out the higher time frame, I'm on the 3-day. When I just draw out the higher time frame structure, and I bring this out, you can see a pretty clear visual of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, up until we get a new swing point from lower lows to higher highs relative to our last lower highs, right? So what I want to bring to your attention now is we had this really nice delivery from the bottom of the broadening, right? We had an established PD array, broadening low, that gave us that aggressive move into a structural change, market structure shift. So lower lows to higher highs because the trend changed. It was no longer a sequence of lower highs, lower lows, lower highs, lower lows. Now we had lower highs, lower lows, higher highs. So the sequence changed. So to me, that's important because this is the initial change of the structure if it is going to have alignment into a new trend now. So the reason I'm keeping an eye on this is we had a really nice liquidity run here, right? You had some really nice buildup that ended up getting swept. So from a higher time frame perspective, low to high, we are now in the region to identify a potential higher low. The only setback from here is the fact that we did gap down, and I do believe it was post earnings, so it is an earnings gap down, but we did come into our optimal trade entry, right? Our point of discount, right? Price has now returned to discount of the potential trend change that it's trying to have. And I like it because of the delivery. So one thing I always talk about is, okay, price is coming into discount of the trend, right? We're at a higher low potential or we're at a lower high potential. But the key metric to try and gauge is how price delivers out of that discount. And so now that we came in, we restructured, right? We restructured that inefficiency. We came back. We had a really strong displacement candle on the 3-day. So for one, I think at minimum, we can see a pop back into the gap to whether or not confirm if we can establish a higher low. And if it doesn't, then you should at least get a gap attempt above the 0.5 and then it starts to reject again. But for the most part, I like this for a continuation off the higher time frame iteration here. And I would like to see some kind of reclaim of the 755, which enters that 0.5 threshold of the current gapping. You do have some inefficiencies here, so I would like to see this kind of displacement hold and price maybe bases above like the 709, 705 area and tries to get a push into that 750. I really like this chart a lot. Next one on the list is a familiar name here with a lot of people, and it's Etsy. As you can see, I've pretty much already kind of outlined what we're looking for here. Is the entire narrative of this changed back in early April when you had the aggressive delivery, and then you came back into discount when you utilized the weekly swing low to swing high. So you went from higher high, higher low, higher high, and now what I really like is, once again, when I talk about the deliveries at a discount, right, is, so I can remove, I can remove this just so you can, I can remove this just so you can see a better visual, but you came back into discount and then you had a gap up against it with daily displacement now hammering on the day. So I would like to see some, stabilization right around here that ends up trying to trade higher. And my target on this would be right around 69.70. But I think Etsy is setting up, and it did it the same way, right? When I like things that enter into discount, I like it to be a compressed form that creates some kind of LRLR. Because you can see how clearly we can depict that trend line, and all that does is it creates a path of least resistance. And so the reason Etsy kind of doesn't meet that criteria is just because of how aggressive it comes into discount. But if price is historical and price has memory, like I usually like to say, is this can probably get mitigated. As you can see, when we were down here in the discount, you had someone similar action where you got some kind of retest, so it could come back, retest the gap, and I would like to then utilize this open gap as my risk reward to potentially trade this back into 70. So it's not really that kind of compressed staircase that can result higher. And the reason I talk about like a staircase compression, right, when you're doing something like this, is because think about it like a staircase. You can go up these stairs really fast, right? Versus if you have price action like this, where it's steeper, it takes a lot more to get through each of those hurdles, right? So when I talk about price entering discount, I like it to be compressed. So Etsy can be a little bit difficult, but just because of the nature of the previous leg, I want to assume that we could result in something similar. So Etsy's on watch because of the delivery out of discount. I do think it can establish another higher low within the 53-57 range and potentially trade up into 68-70 zone. That would be my target. Circle, something that I am watching just due to the confluence that exists now. This does have earnings coming up, so this could be a little bit trickier, but I am starting to really like this within this weekly leg because of the confluence that exists. So you had the aggressive IPO, right, for 3 weeks. So within this leg, this could be the very first higher low that it tries to set in stone, you know, post IPO. And the reason I like it is because when I take the swing low to swing high of the weekly leg, you have confluence. Not only do you have an aggressive displacement that has established those fair value gaps, so price is coming back to refill some of those orders, but you also have some really nice confluences of bullish gaps that are present. And as we kind of come into the zone, the 123, 153, about a $30 window, I would like to see if this can eventually hold for the higher low to then potentially trade back into like maybe 200, 210, somewhere within that area. So this is definitely something I'm keeping an eye on. You can see how the 2 days is shaping out. You are starting to see some progression here slowing down. And if we take into account the lower time frame structure, you could see why I bring up the 210, 200 area, right? Because it also lines up with an existing gap that could actually give you a potential lower high to then build out. So I think this is starting to set up for a really good pop, assuming earnings isn't terrible. And if earnings is bad, I would be looking for a potential dip buy somewhere within that 122, 150 to then see if we can scale out around the 200s. So this would be setting up for a higher time frame swing trade. ENPH. So one thing I want to cover on ENPH is this daily chart. And the reason I want to bring it up is because, as you can see, I'll have outline here. Oops. Each broadening low has yielded in some form of lower high. Each broadening low, lower high. Each broadening low, lower high. And it kind of sets up a very similar reversal structure, right? And so now we're at a point here where we have a potential broadening low to potentially give us another lower high. And the reason I want to bring this up is because of what the hourly is doing. So it's been broadening to broadening, right? And each broadening has given you at least a retracement back into the 0.5, 0.618. So this could potentially do something similar from the last swing point high to our current broadening low, lower low. Can this make a move back into 37, 38? Now there are some inefficiencies to trade through, right? If I annotate this, it does have some obstacles in between the 33 and 35 areas, so those could be short-term targets. But when I go and show you how the hourly is trying to look, and this is why I think the risk reward is starting to favor some really good reversal structures. Remember, everything's a domino effect, so the lower time frames will actually show you a little bit better criteria that then as I say, domino into the higher time frame. So you will usually see the setups set up on the lower time frames build the higher time frames. But that's how you can kind of use time frame alignment to kind of pair everything together. And the reason I'm talking about the hourly, right, just ignoring that, is because you had an aggressive displacement candle right here. So participants were selling this very aggressively to where you made new broadening lows and new 52-week lows, right? But then it's the delivery again. So whenever I'm looking for reversals off of discounts, off of broadening lows and highs, it's always about the delivery of price. How does it deliver out of that? Because if the narrative is we're coming into new broadening lows, we're coming into discount, we should see buyers or sellers. It all depends on the type of trend that you're looking for, but we should see them present themselves within that auction, right? And so when I see a gap up off of new 52-week lows that is then followed by a displacement candle, right? That counters that displacement candle that gave us the broadening lows. Now we have a very strong inversion gap because they overlap. Displacement candle that's now overlapped by another displacement candle that's kind of now utilizing the gap up to its advantage. So what I want to see now is I want to see if we can stabilize above that overlapping inefficiency to now try and get you some pops into the first 3350 and then see if we can start to trade into the 3435 areas, because then that kind of shifts how the daily starts to look and it can potentially unwind a little bit more of some action here into the lower high if it's going to keep the memory of that overall development that it's at, right? When I pretty much just put this on here, you can kind of see what it's been. It's been very, very, what's the word? Very methodical. So ENPH is one I'm watching for potential reversal structures. The next one I am keeping an eye on is Tesla. And the reason I like Tesla, so we're going to start off the daily here first off. And you're probably wondering why these exist here. So the fibs here actually take into account the overall monthly leg. So when I have this overall monthly range, if I show you from here to here, we are still potentially trying to trade back up into premium. This is our kind of medium threshold, our equilibrium of the range. And I would like to see if price can push up into our premium, because premium has a lot of confluence. There is a gap here. You also have everyone's talking about this. You also have a very strong daily monthly wedge, right? I think we're still, if I go into the monthly, I believe we are still triple inside month. So the reason I want to bring this up though is we did just get some really nice, when I zoom into the 4 hour, so we did just get some really nice liquidity grabs here. We did fill that gap. But now what's a central focus of is balancing above. So you have reference points between 312 and 327. So can now price materialize through this area to then get a bit of a higher run into like the 350, 360 area. My end goal for Tesla, if the triple inside month does develop to the upside, would be into the 380, 400 zones. But at the current moment, we're trying to reference these 4 hour displacement candles that were followed with a stop loss rate off of our external. So we had a daily push that was underneath the overall wedge. We did get some really nice external sweeps that we did come into a gap here, and you see how nicely price reacted. Remember, gap up, support price, and you see the result after. So now what I want to see is, can we use these reference points? Can we use these aggressive displacement candles to give buyers the momentum to continue to progress higher? And when I go into the hourly, you also have some really nice MMBM on the lower time frames developing. Consolidation, displacement, consolidation, displacement. Now you're going into another form of consolidation. If so, we could get 338 pretty early on in this week. And then from there, we just want to see that progression develop more on the 4 hour and the daily. So I am looking for this to trade higher. I would like to see it stabilize between that 315, 320, 25 area, and pretty much use those as pinpoints to kind of either find entry points to continue the roll up, or just see if we can get some resets to kind of restructure these inefficiencies to then trade higher. Because of how they were created, I would assume they're going to support price higher. This one is a bit of a random one, and the only reason I'm bringing it up is just because of the development that it's going through. Earnings is out of the way. You got the low end of the range sweep. Now you have some compression post earnings, and this compression looks like a really nice, I mean, you see it here, a really nice wedge flag that's taking shape. And so the main thing I want to do is I'm just prioritizing what price did to get here. And the reason is we had a range low sweep that was then followed up by a gap up now inside day. And the reason I like this kind of setup is because it sets up those 2B bottoms, right? You get the liquidity trap followed by the aggressive reclaim. And so if this is going to hold true in the narrative of this bullish post earnings gap, I would like to see a pretty clean LRLR that takes out these pivots and pretty much trades into 21 with ease, 21, 21.5. So this could be a good weekly trade, weekly candidate if this inside day develops higher. And I just pretty much like the narrative of this overall compression. And if you go into the weekly, you can see what I'm talking about here. So you have a really nice weekly buildup. It's been pretty much consolidating since June. So we've had about, what, 2 months and some change of consolidation, pretty much compressing price and earnings is out of the way. So again, this looks like a really clean LRLR move up into that 21.5, maybe as high as 22.3. Pretty straightforward on this one. One that I am actually really interested in is Ally Financial. And this one's not really talked about much, but it's pretty much coming down into, our daily discount zone. And I'm pretty much taking into account the last swing point low before the overall aggressive leg. So this to me is the entirety of the range. And now remember when I talked about staircases, right? This is kind of how it looks like. You see how it's all compressed price action? So I am one to believe that in between here and 35s, because you do have confluence of a gap paired with a potential external raid that does reset our inefficiency here. If it does, it doesn't have to because of how it's building up. If we get a reclaim of 38, if anything, if we get a reclaim of 38, then I'm assuming that this is going to trade higher. But in between here and 35, I do believe it's setting up for a potential higher low to at least take out some of these stops, right? Because all it's doing is it's compressing within a bullish order flow on the higher time frames. Oh, I'm sorry, I don't know why this is not deleting. But what it's doing is it's compressing within your bullish order flow. And I do believe that it could set up for a really nice buy side raid, right? This compression has just swept all of your previous sell side, sell side, sell side, sell side. Now you do have a gap down, so this is very important that it reclaims 38. Because if not, then I am anticipating one more potential drive down to sweep and give us a gap reset that then delivers a really nice trade back up into maybe 40-ish, 39, 39.8 up into like the high 40s. But really clean setup. I love how it's building out. This is a perfect example of that staircase, or as you like to call it, the LRLR, right? The low resistance liquidity run, because it becomes a path of least resistance because there's not really anything stopping it, right? It's not an aggressive displacement down that's kind of keeping price. The only little piece of obstacle is this little gap up, and after that it should have a pretty, I would say, easy run into like those high 39s, low 40s, in my opinion. Another one is applied, I'm not even going to say that, AAOI, optoelectronics. And the reason being is because when I zoom out, let me go into the 2-day here. I just want to give you a bit of a cleaner visual, right? So you could see you had this bearish order flow. So we had a narrative of lower highs and lower lows, and price was continuing until you had this really nice delivery followed by that staircase compression that then took you into higher lows, higher highs. So taking into account that last swing point low before your aggressive delivery, which did establish an OB and some really nice inefficiencies. As you can see, we're also cleaning one up right here. And there's a lot of confluence in between this inefficiency because it is a breaker paired with a fair value gap. And you can see how we're pretty much trying to hold it through even after earnings, right? So I think this is starting to become appealing for a potential reversal candidate. Obviously, you've had, you know, 3 2-day candles that have supportive buyers. And so now we're just looking for a strong aggression candle because you do have a bit of bearish structure now to try and reclaim. So above 25.70, I do think sets this up for a even bigger run into like 30 and up. So just have to watch how the development here takes place. But if we do start to lose like 18, this does become a potential sell side again. So keeping this on watch as we are at our potential higher low, and it's more about the confluence that exists here. Previous breaker, your inefficiency being restructured, price showing some signs of stabilization within your optimal trade. So there's more than 3 confluences that we can use to our advantage. Now it just comes down to the delivery of price out of this. So how can buyers step up? We need some form of reversal structure, meaning a displacement candle on the lower time frames that then utilizes those higher lows or those aggressive candles, or even a gap up if possible. So, and you also have the 200 MA here that it's trying to reclaim. But it is starting to set up and it is starting to look appealing. Again, this to me still looks like a potential MMBM, right? You have the consolidation, breakout, reset, breakout. So it is at the point of, for me, it's more of at a point of control for buyers. And in between like the 19 and 21, I do think it could give you some potential significant adds of the higher low to develop and potentially get you a move back into 29. So keep this on watch, see how price develops in between that 19 and 21. And if it works, it should give you some nice reactions through 25 to then trade higher. One I also want to talk about is CHWY. And this one is just showing me potential signs of reversal. It's because of what you did previously. So if I zoom into the 4-hour, once again, you can see I use this time frame a lot because it gives me a lot of clarity. I'm going to come in and annotate displacement candle here, and I'm going to annotate it so you see what I'm talking about, right? And I'm going to now reference the daily again. So when I extend this out, another overlapping inefficiency off the broadening lows paired with a gap up and another supportive volume imbalance. So now that this has set up, I'm looking for that potential higher low to develop off of our reference point, because this is a very important candle now due to what it did to our previous candle that gave us those broadening lows and how we overlapped those aggressive inefficiencies, right? So buyers stepped up where they needed to, and they did it with, you know, dominance. So now can we prioritize the 34, 35.7 area to stabilize, establish a higher low, and now find new aggressors within the auction, because order flow has been down for some time. So this is a really good risk reward setup just based off of the fact of what this candle did and the overlapping inefficiencies off the broadening low paired with double gaps. So can we now reference this to potentially trade higher into like 37, 38? One of my favorite charts is Spot and how it started. So I'm gonna remove this for right now, but you can see, whoops, you can see how we have a clean breakdown paired with a gap, right? So this gap is very important. Do we agree? Because this gap is what took us into those existing broadening lows. But then what happens is, look at how we exhaust. We exhaust and don't aggressively deliver. So price rejected where it needed to, right? You got the lower high, but then you didn't get the acceleration down. Versus we showed exhaustion that was then paired with a gap. You see how those deliveries of price have context? Look at how you gap up off of an exhaustion low. So now that gap up has merit because on the 4-hour, you get this, right? Look. So when I drag this out, what happened? It wasn't a lower high or lower low. Now it was a lower high, slightly higher low to higher highs, right? Off the lower time frames. And this is how I compare it to the higher ones, right? Is it making sense a little bit? So now I have a valid swing low point off the hourlies to bring in, and look at how price uses the confluence of the gap up. Gap ups support price, gap up, gap downs support sellers. Gap ups support buyers, gap downs support sellers. Remember that. And then it's the context of our first potential higher low, and then look at the delivery. If this gap down was supposed to reject price, why did we displace through and then gap up through it, right? So now we have some valid swing points, right? This is still a bit arbitrary because I don't have enough retracement. So if you do ping it around here, right? I mean, this could come back here, maybe retest the trend line and then trade higher. So something to keep an eye on, but Spotify has really nice reversal structure. And so what I like about this is not only is it a really nice reversal structure, but the path of least resistance is now up into that 740. Nothing's really stopping it to trade through all these pivots. This is how a clean LRLR looks. And especially now that we've set in those reversal structures, it looks really, really nice to trade up into that. So now it's just coming back to we have good reference in between 676 and 700. So about a 25-point window to see how price can stabilize to potentially get a nice LRLR run up into 740. And it's also the context of what we did, right? Gap down, a very aggressive gap down. That was post earnings. That was then displaced through. Why did we aggressively push back through a gap when this was also a post earnings gap? It was a bearish peg that should have rejected. So you have to think about that, right? That narrative is changing. The aggressors are now becoming buyers. And if they're going to become buyers, identify where those liquidity targets can be due to the momentum of this chart. So I think Spotify is a really nice chart. Yes, we saw some daily exhaustion. So this could be a good point to kind of now address the previous gap with an overlapping displacement to see if we can build around here and potentially get a move into those 740s. This one's going to be quick just because I like the higher time frame structure. I'm not going to spend too much time on it. It just looks to me like a clean MMBM that potentially wants to deliver up into the gap. MU. So a lot of people know that I was watching this, especially from the 8x trade server. We talked about our daily discount between 106 and the gap. So 100, 106 was our point of confluence, and look how clean it's been. And when I show you the weekly, this is weekly aggression, and you also have a really nice inefficiency that got cleaned up with displacement. So I do think this can potentially set up for a move all the way back up into 130, right? Because you're already pretty much breaking out of this. If you kind of draw it out here a little bit, right? You are pretty much already triggering through. So this is a really nice displacement candle. I do think it gravitates up into that gap, gets a peak, maybe then establish a higher low, and then eventually trades higher. MU is very, very powerful. PEP has kind of the same chart, and I also talked about this in 8x trades. You can see from the last build-up, higher low, and remember, I'm pairing these optimal trade entries or these discount zones with pieces of confluence, right? You can see how a lot of the other ones, they have some kind of reversal structure showing up. You have some kind of previous PD array, some supportive SR flip, either a breaker, some kind of gap. It's not just, oh, something's at a discount. Oh, our fibs show it low. It's about establishing context. The more confluence, the better. And so you can see this is kind of what I had outlined on PEP. And from the last low to high, established a higher low, I would like to see this deliver up into, the 147 higher. And when I show you the weekly, this is just a beautiful weekly chart. Look at this. Look at this really nice curve bottom. Look at the overlapping inefficiency that got restructured. So you could see in between here and here. Look at how we displace and then utilize the previous inefficiency as support, and now getting a really clean weekly potential cup and handle here. And when price has delivery like this, I do think we trade up into 147 because we do have relative equal highs in there, and potentially even as high as like 150 and so on and so forth, if this is going to truly trade out the way I think based off of this weekly. It could take some time, but it's showing a really nice signs of those potential reversals. Look at the monthly. You have monthly displacement off the broadening low. 2 months of buyers supported by a strong monthly that's still inside, but you have now confluence because this is monthly displacement. So 147, 155 would be my primary targets on this. And you could see how it's pretty much structured out here. Overlapping efficiency like we talked about on the weekly. You have your confluence of the earnings gap price compresses, and now the delivery out, right? Displacement followed by displacement off of our gap, 618, weekly inversion gap, or I guess you could call it your BPR or whatever you call your overlapping. Everyone calls it something different. To me, it's an inversion gap because it's a previous gap that got inverted with another gap. That's what I like to call it. But I do think PEP continues, and we could get 147. Another one that is really clean is Meta, and I think I had a cleaner. Yeah, there you go, 4 hour. So Meta on the 4 hour, you're pretty much compressing above your previous all-time highs, and you have a really nice post-earnings gap here. So I do think it kind of goes into a state of compression, maybe develops for a little bit. Next week is Opex. So I don't know if I personally wouldn't anticipate this to break out in Opex, but it very well could. But I would anticipate this earnings gap paired with a current gap on the lower time frames to kind of develop price and it finds some kind of base around here. And I do think Meta can trade up into 800. And the last one is a bit of a sleeper off the 4 hour. I don't think a lot of people are talking about it, but it is showing signs of those potential reversals because of what we're doing post broadening formation, low, and our 2-week sweep. So you could see here, 2-week has been restructured. And so when I go back into the daily, oh, sorry, I meant the 4 hours. So when I go back into the 4 hour, we have really nice aggression off that 2-week. So our higher time frame inefficiency rebalanced. The buy orders did come in, and now we have some aggressive displacement. The only thing left now is to kind of invert this little gap here. Last swing point low before the aggressive move down. Can we now turn this into an SR flip where we poke above it and then get some kind of push through and trade up into 75 and up? Very clean chart. I do like the fact that this displacement did come off those broadening lows from a 2-week rebalance. Now we just have a small gap to get through, but if we can continue to balance out, I do think this can trade up into 75 and potentially even fill in the gap at 77. Very clean chart. It does look almost ready, just a little bit more of information. And you do have a reference point, right? So 68, 70 is very, very appealing for buyers to continue to hold. Hopefully you enjoyed the watch list, and that is all. If you like this video, please like, subscribe, rate, comment, follow for more. Thanks, guys.